Welcome to Trading Lounge and the European indices for Wednesday, November the 23rd. The US have a holiday not tonight, but Thanksgiving on Thursday and half a day Friday, so we could probably expect low volumes. Just looking at the BUND here, it looks like we're going to be looks like we've got this wave 3 low in here and a push up. How far it goes up, maybe to the 38.2%. We'll see how that plays out. And yeah, I was listening to Jeffrey Schneider yesterday, I think it was, and he was explaining that the 30-year yield curves were overlapping the 10 years, and the 10 years were overlapping the 2 years. So there's something really weird going on in Europe there, based on that. And yeah, so anyway, over to the DAX. We've got, we're looking at wave 3 here with an ABC here for wave 4, and then 1 and 2, and then going up for 3, 4, 5, so they could probably push up a little bit higher there. We've got about, looking at the US dollar with all of this, so let's just have a bit of a look at the US dollar. Now that the US dollar now that the US dollar, we're looking for wave 3 here as an A, and then an ABC for the B wave, and a C wave up here for wave 4. And it looks like we're going down for 1 and 2 and 3 and 4. This should take about 4 days, because wave 1 over here took about 4 days as well. There's a weekend in that as well. So anyway, just a bit of a rough sort of sketch for this move down here. And yeah, so while that's moving down, we're going to see everything pretty much go to the upside, you know. So yeah, so this could extend up further here to the 4.8 up here as well for this. So we've got that time period there on that. So if you're long, that's good. Just keep the stop under this particular low here or this low here. And this particular move up too, just in terms of timing, even though the US have got a holiday, we're looking at 1, 2, 3, 4 here, and then up for wave 5 here as 1, 2, 3, 4, 5 up to this point. And then we need to get a setup to be long or short after that. But this will also, just looking around the block at other markets to help with a little bit of timing on these, all these events is important. So yeah, now the 14,500, the 14 is not that important, but the 500 here, you're going to see a bit of a dance across that in some way or another. Okay, so just look for a classic trading levels pattern across here, and just keep your stop out of the way, and be, you know, mindful that the market can sit here for a while. This wave 3 here needs to be longer than wave 1, so we'll probably be up here a little bit further with all of that. But yeah, let's just get that here as a bit of a starting point. So we expect it to be longer than this move here. Okay, so we'll start off with the same size roughly, and we can take it from that point. But yeah, so we should see you know, a good 3 days to the upside. And we're looking over here in the US markets, we're looking for a wave C or 1, but the European markets have got a bit more of a bullish edge to them, so we can expect them to go higher. But I need to prove that, you know, once we get to the top here in these 5 waves, I'll have to prove that we're going further up. So don't get lost in that just yet. Just stay focused here for the time being. Yeah, so that's that. And yeah, so the stock 50 is the same, the wave 3 here, the 4 here, the 1 and 2. We talked about going long here yesterday, but you got a little classic trading levels pattern in there, so should push up to the 4,000, and keep your stop under here for the time being. And yeah, looking for those 5 waves, so 1, 2, 1 and 2 here, 1 and 2, and so we've still got further to move up, so it should be all right at that point. I was looking at the FTSE 250. I like to look at that now and again, and yeah, look, I could probably squeeze a correction out of the whole move down here, but it just counts better as a as a 5-wave structure, really. So that would mean that we've been watching this push off the, we counted 1, 2, 3, 4, 5 down here at the medium level 16, and then watched wave 1 go up, and wave 1 of the next move to go up 1 and 2, 1 and 2, 1 and 2, little third wave. Anyway, we've got this to move up to these old highs here. We could have a pullback at this point, and then a move up to the 61.8% roughly there. But yeah, everything's said and done. I mean, we'll just keep an eye on it. We could end up with another leg down here, which wouldn't surprise me. But yeah, so unless you can get a corrective pattern out of this, let me know. I mean, you could probably go the A wave to here, some sort of A, B, C for the B wave here, and down for the C wave here. But like I said, you kind of like you sort of pushing it around a little bit, I mean, we've got 5 waves here, we've got 1 here, 2 here, and 5 waves in this little structure here for 3, 4 and 5 here. So, but yeah, anyway, it's open for discussion. Over to the FTSE though, just looking at it from this particular low, as we're been counting here as 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2 and 1, 2, 3, 4, 5 for the third, fourth and fifth for the third, fourth. So yeah, all going quite well, third and fourth here. Then we're looking for 1, 2, 3, 4, 5 up here. Now we'll probably have the third wave up here because we still need to look, because I don't want to call this an A wave and a B wave here. I could, but there's no proportion ratio between wave A and wave C at this point. So it looks a little bit more bullish than that, but we'll just gather the evidence. So we've been talking about wave 4 here for a long time now, and wave 1 and 2, and we'll look at 3 and 4. There'll be some sort of dance across the 500, so more patience than anything else at that stage is required. And we'll probably put the wave 3 here, and we'll put the wave C here, but we still need to confirm this on the other side here for that. So that's where we are for the FTSE, going along quite nicely. And I think we've probably talked about going long here anyway off the B wave high, but and that would be the target, to take some money off the table. But we should be spending at least 3 days to the upside. But the spanner in the works is the US having holidays. But sometimes when the US have holidays, when they come back, they're all G'd up and like to throw some money on the table, and it becomes a bit bullish. But we'll see. Probably do the opposite now that I've said that. But yeah, something I just noticed. So that's that, and we've been looking at the FX now. So I'll just go back to the US dollar index here for a moment. Yesterday, as you know, we were looking for well, originally I was looking for the A wave, the B wave and the C wave here, and having wave 4 here and coming back to this wave 4 of 1 lesser degree of the 40%, but it ended up pushing up higher. But we noted that there was 5 waves down here, so I thought, well, wave 1 here and pulling back for wave 2. But as soon as it took that little top out there, I understood that this is not over. So, but looks, anyway, we've got the top here yesterday, so that's good, as an A and a B and a C. So 1, 2, 3, 4, 5. So this will take like 3 to 4 days to come down as well. But when this low comes in here, I'm not saying that's wave C just yet, but there will be 5 waves after this. So 1, 2, 3, 4 and 5 down here. So this is going to be quite significant, this low. This is where it is possible for this to push up and make new highs at that point. It's also possible for it to do a correction and go down further. So we need to talk about that. But what I can say is that if this is correct as wave 1, 2, 3, 4, normally wave 3 comes to the old low or old high, depending on which way you're going. But when this is in here, if that's the case, when that's in here, this is going to push up. So that's going to push commodities down. It's going to push indices down, and so on and so on. You know what I mean? So that this will be important. But on the flip side, while that's moving down, we can look at the euro here as the A, the B, and probably 1, 2, 3, 4, and 5 here. But otherwise, I could put this B wave over here, which is probably better because that's what we did on the US dollar index. So an A and a B and a C for the B wave and down for the C wave. And yeah, so we're looking for 4 or 5 days to the upside. So lock yourself out here on a little trade here. There'll be a little classic trading levels pattern of 103. 103 is important because it's top of group 1 of parity here of 1. So that should have a pretty straight run to 5. Once we get on the flip side of this, just like the S&P and everything else, we'll need to just be a little bit patient and figure out which direction we're going for the longer term at that stage. And this will be the same for the pound as well. Yesterday we looked at, we might need to put wave 4 over here for this actually, probably will. But it did give me a nice little 5 waves here, and then I could see an A, B, C in here. So it's possible, plausible. I think what we'll do is we'll just put this here as well, and that will just make us think a little bit more carefully as things go along. It's not really pushing up strong, but I'd probably, I mean, it's still, I mean, I can see it going high. I don't have a problem with it moving, basically making a high above here somewhere. That's the essence of the situation. So basically, let's just have a look in here for a moment. It's 10,000 ticks. Let's just go to 100. Let's just see if we can see inside this a little bit. That's wave 1 and 2 here in that sense, because that's little 1 and 2 here, and then the third wave is 1, 2, 3, 4, 5 here for the third wave, fourth wave, and probably got the fifth wave here, but that's a bit a long way, isn't it? Can't go 1, 2, 3, 4 because we're getting a bit close to the overlap there. I'm just thinking about where to put stops. That's what I'm really thinking about. Let's just go back if it's a bit if it's a bit hard to see there. Let's just go back to this US dollar. Sorry to churn up your time, but let's just have a little look at this here. That's 2,000 ticks. Let's go to 100 ticks here and just check on this. I mean, the natural thing to do would be 1, 2, 3, 4, 5 here, but I don't think that's the case. I can see you've got 1, 2, 3, 4, 5 here for 1 and 2. That'll be the third wave. So it's like we've got 1 and 2 and 1 and 2 here. Do you know? And this is also 5 waves. So yeah, so it's a little bit, we don't need any of this now, do we? That's all pretty well cemented. Because rallied quite high too here, you know, it's not like a fourth wave. I mean, we could go 1, 2, 3, 4, and 5 and have that as 1 and 2, but that might get us into trouble at this point. The thing that I do notice with it though, the thing that I can see is that you can see how tight this is in here, these little 5 waves, and then this breaks through here, and you see how these structures here are this 5 wave structure here is much bigger than this one, and then this one here is much bigger again as well, isn't it? You know, so it's likely that we could put this here, because basically what I'm saying here is that it looks like a trend because it's not contracting. The structures in here, the ranges are expanding. So that's the good news here. I'll probably have to change this a bit, but because we're actually looking for wave 1 here in that regard, but that might be a little bit It's 1, 2, 3, 4, 5 here. This can be the fourth wave. A bit small for that fourth wave though. It could be coming back up to here, and then here, and then here. Just trying to find the place to put the stop really, just in case I got the. Well, if I got it wrong, that would be 1, 2, 3, 4, 5. There, that would be one way of looking at it, with wave 2 here. So that's one way of looking at it. If we took this and this here to 665, that would be about right. 665, that's there. So that could come back from there to there if that was the other way around. So that's so really the stop needs to go above this one here, but also above here. So it needs to go at 10,734 or 1037. So that's up there for that. So that's where that needs to go to be safe at that point. So that will be on the flip side at the other side, the other one. So coming back here for this, that would be on that date, 22nd of November. 22nd, so that's the 22nd here. Still the 22nd at second. Yeah, it's got to go there really at this point. It's a bit of a shame, but I think we're pretty safe anyway, because I'm just wondering if that's 1, 2, 3, 4, 5 here. The thing is that that can come back to the 61.8%. So keeping the stop out of the way is good. I mean, because at the end of the day, if you're going to lose money, it's because you've been stopped out, isn't it? I mean, that's the logic of it all. It's the stop loss that makes you lose your money. Let's double check this here. Yeah, we could count this differently. We could count this as 1 and 2 to here. But anyway, the stop's got to go down here. Just keep it out of the way for the moment. Alrighty, I'll leave that at that, and I'll just clean up my mess and leave it at that. Alrighty, thanks for tuning in. Cheers.